Welcome to the London Stock Exchange. Can you feel it? The buzz of energy just before the market opens. Feels like the whole city is waiting. We love this moment. For most people, when they think of this place, they think of share prices. All those green and red numbers scrolling around the building. But behind those numbers, there are other deeper values that are just as important. The value of delivery, from media to medicines, from technology to tea. Capital markets help finance the products and services that we use every day. The value of innovation, from vaccines to batteries, breakthroughs don't come cheap. We connect great ideas to capital, helping to build a better future for everybody. And values like trust. For 300 years, trust has been at the heart of every transaction in this city. It still is. Hence our motto, our word is our bond. Today and every day, these are the values behind the numbers. And they're the reason that we're able to bring you moments like this. It's only seconds away now. Everyone is holding their breath. Let's not keep them waiting.
Laying the fastest fibre networks, powering the energy hubs of tomorrow, or renewing the infrastructure we rely on every day. It's your bond with Britain. And as British businesses grow, you could share in their returns, steadily, reliably, consistently. It's your bond with Britain. Because under the UK's new rules, the bond market's opening up. From £1 capital investment, you'll be able to invest directly in the biggest businesses. It's your bond with Britain. So, if you want to be a part of progress and diversify your portfolio while you're at it, you might want to consider the all-new Access Bond. A bond between you and Britain. Introducing Access Bonds. Let's talk bonds.
Good morning, everybody, and welcome to the London Stock Exchange for what I am delighted to say is the fixed income takeover of the exchange. For those of you who don't know me, my name is Julia Hoggart. I'm the CEO of the exchange, and I am particularly grateful to be joined on the balcony this morning and indeed within the building by so many of the key players within our fixed income markets, and to have the honour of having Sarah Pritchard, the Deputy Chief Executive of the FCA with me here today as well, to celebrate a real landmark. Not only are we launching our new Access Bonds, but we're also marking a huge amount of innovation in regulatory reform across our markets that's been driven by the FCA. And today is the culmination of a journey that is resulting in the greatest set of primary markets reforms in a generation. The government and the FCA, with the ecosystem, have asked themselves the critical question: how do we ensure that our primary and secondary capital raising rules are fit for purpose, so that companies can raise capital efficiently and effectively, and investors are appropriately informed? But throughout, they have also asked themselves another question. How do we enfranchise retail investors to participate more in our markets? This work has taken many years, organisations and people to get to this stage, or more perhaps accurately, this balcony. The Treasury and the FCA deserve a huge amount of credit, not just for what they have done, but for the way in which they have done it, in a highly dynamic and consultative fashion. So while today could be seen as the launch of an intensely technical thing with a funny name, I think the consensus is we pronounce it POETA, but I'm not absolutely certain. These rule changes mean so much more. The FCA's new prospectus rules, which go live today, are genuinely world-leading and seek to address the challenges that issuers and indeed investors used to face. These rules increase pace, lower costs, and reduce administrative burdens for issuers, meaning companies can raise capital more easily and efficiently to respond to strategic opportunities and therefore do the very thing everyone wants them to do, thrive, and in doing so, create value. And crucially, they make it easier for retail investors to participate in our debt and equity markets, enabling them to have a stake in the growth of incredible British companies. Throughout our 300-year history, we have always connected those who have capital with those who need it in service of an objective. And for many of those 300 years, retail investors were a critical linchpin of our markets. But over 20 years or so, perhaps for good intent but with unintended consequences, we have seen retail investors have less and less access to our markets and become more and more disenfranchised. That is why today is such a cause for celebration and deserves to be marked. Whilst today's rules also enable retail to participate more in secondary equity capital raisings, it's the debt markets that I want to focus on. As many of you know, I've spent much of my career in the fixed income market, so I'm particularly thrilled that these rules provide the platform for today's access bonds. Access bonds can be issued to any investor in the UK, whether professional or private, and the rules make it easier for companies to issue bonds in lower denominations. Now, I had to go and dig one out, but even as low as £1. For too long, retail have been unable to buy the very product that would be a prudent part of their portfolio. Plain vanilla bonds issued by high-quality British companies that those same retail investors know and love. In short, we want more people to have a real bond with Britain, and from today, they can do. More broadly, we want retail investors in the UK to feel that they have a personal stake in the success of the British economy and British business. And there is no better time to encourage that aim. There is real momentum in the UK's markets, and the FTSE 100 is at record levels and still above 10,000, notwithstanding this morning's news. Last year, the UK raised more equity capital than any of its European peers, and in 2025, the London Stock Exchange had its best year for debt listings in 16 years. Now, as the film says, our motto is dictum meum pactum. My word is my bond. That couldn't be more apposite today, I don't think. And when companies and investors come to the exchange, whether it's to IPO or to issue a bond, we want them to be assured of that promise, that we recognise the ambition of the companies listed in London, that we believe in the importance of retail investors, that with innovation and vision, we can cement the UK's position as a global financial centre and help drive the UK economy, even if it sometimes takes a weirdly named set of rules to do so. So I want to thank everyone at the Treasury and everyone at the Financial Conduct Authority and all the industry colleagues who've been working so hard to make today happen, not only to transform the rules, but to turn them into tangible products and services that people can buy. At the end of the day, having been at the FCA myself, I know the immense amount of work it takes to change the rules, but the real satisfaction is when they're applied. And today is the start of turning that rule set into a real set of tangible products that hopefully will re-enfranchise retail, particularly in our fixed income markets, for many, many years to come. Now it is my pleasure to hand over to Sarah, who's been driving so much of this agenda. Sarah, over to you.
Thank you, Julia, and good morning to everyone. It's absolutely fantastic to be here today to mark the start date for our new rules on prospectuses. I won't use the acronym. These are bold reforms, reforms which make it quicker and easier and cheaper for companies to raise new capital. Reforms which support UK growth, making UK capital markets easier to access. We've taken the opportunity to use this moment of reform to carefully calibrate where our rules should set the standards and where the market is capable of setting them themselves. We consulted widely, we listened, we engaged extensively so that we could reach that right balance. An approach that we also took in listings reforms and the approach that you will see us take in all of our significant market reform as we are setting the standards for the years ahead. We will still be reviewing prospectuses, of course, whenever they are produced, and we have set the threshold for requiring them at 75% of further issued capital. It's important that investors are provided with the information that they need to be able to make informed decisions. Our rules do that. They maintain the core trusted framework, but only require companies to produce a prospectus when there is a clear information gap between them and investors, and this reduces costs. Many of you will have heard me say before, and Julia has just mentioned, that success here isn't just about a set of rules. Yes, the rules being finalised is a moment to celebrate, but more importantly, it is about seeing the market make use of them. And to that end, I'm absolutely delighted to hear from Julia today about the new access bonds. That demonstrates how our reforms to improve retail access to corporate bonds by enabling smaller denominations are already being embraced by the market to broaden participation. The rules are being used and they are coming to life. Now, although we finalise this set of reforms, we are not stopping. Our focus remains on supporting UK capital markets. We want them to thrive. We're working to ensure that retail investors can get access to the help and guidance that they need to be able to make informed decisions, so that they can better navigate their financial lives and to help build a greater culture of retail investment in the UK. Targeted support on landmark reforms under the Advice Guidance Boundary Review will go live very soon. And with the launch of public offer platforms, we've made it easier for smaller companies to raise money from a wider pool of investors as a one-off so that they can scale up outside publicly traded markets. There's more to look forward to. We look forward to the launch of the consolidated tape for bonds and the first trade on Pisces platforms later this year. Our focus is clear. We are working to support growth, help consumers navigate their financial lives, while being a smarter regulator and fighting crime along the way. The ways of working that we have used here and that we are using to drive all of our big reform, listening, engaging extensively, being bold, executing at pace, will remain. Thank you.
We actually didn't coordinate what we said, but I think it is an illustration of how joined up the ecosystem is and how singular the vision for what we want to achieve for the UK capital markets is, that there are so many people on this balcony who've been working so long to make this happen, and independently we can all articulate its vision and objective the same way. And I think it says a lot about the strength of the UK ecosystem that that's where we are today. I'm never prouder than the moments when we get to have the debt capital markets represented on the balcony of the Exchange. It is utterly thrilling to have so many of you all here today to celebrate what is really quite a pivotal moment in the evolution of our debt markets. The duty of all of us now is to continue to uphold that promise that Sarah's just articulated, that we turn the policy into practice, into action, and ultimately into retail participation in our bond markets once again. So thank you all. Can I ask you all to come back upstairs? We'll continue both the celebration and hopefully the conversation about how we do exactly that. Thank you very much indeed again. Thank you.